On the money. Our talk today is about money, and let's face it, money has changed. It is not anything like what it used to be, is it? Do you remember paying with pounds, dollars, the actual physical coins? So 20th century. In fact, I think I still have some rupees in my wallet. A note to our physical audience, thanks so much for being here. We are streaming live around the world. Our partners, media partners, NDTV, BQ Prime, Daily Hunt, and Gulf News. If you'd like to share what you hear, please do use the hashtag IGFUAE and follow the conversation at IGF Updates. This is, of course, our first major event after India has become the president of the G20. And India Global Forum, of course, is where India meets the world and the world meets India. So back to our topic. Modern advances have revolutionized payments, finances, and the relationship that people have with financial organizations. But perhaps what's most remarkable about this is how much more is still possible. The pace of change is actually lagging the potential for change. So first of all, I'm going to be speaking with two entrepreneurs who see the future and will tell us something about how to get there. Later in the show, we're going to be looking with a key piece of that future with two experts, the booming financial corridor between India and the UAE. So let me introduce my first two guests. Thank you very much for coming along. Abhimanyu Munjal, Managing Director and CEO, Hero FinCorp. And I'm also very pleased to have Ganesh Rengaswamy, Managing Partner, Quona Capital.
Thank you.
So let's start with the big picture. The financial world is changing rapidly, but it isn't changing evenly. So maybe this is the version of the world that isn't so flat. So Abhimanyu, you've said that it's okay to be inspired by innovations in the West, but you can't just copy them. Tell us a little bit more about that.
India is a very unique country, and we have multiple states, different demographics, and India needs a very tailored to India, made in India solution. And I remember I started the financial services business, which is the lending business 10 years back. And we do two-wheeler finance as our core business. 10 years back, we used to actually be underwriting two-wheelers based on asset finance because there was no data. There was a data asymmetry in India. Today, with the help of a lot of initiatives by the regulator, by the government, by the industry, we have an India stack which is available. We have the Jam Trinity, which is Jan-Dhan, Aadhaar, bank accounts. So with all of that, we are being able to move from asset-based lending to flow-based lending, which is just amazing, right?
Let me just pause on that for a moment, because we throw these terms around like the India stack, like everybody knows them. And I have to be totally honest that before this week, I couldn't actually explain to you beyond the first two layers of the stack. So let's just take it back a little bit. So we have digital identity. On top of that, we have the payments, the ability to send payments anywhere from one person instantaneously to somebody else within India. And then above that, you're one of those companies who's very successfully building a business on top of those first two levels. And you're using a trail of data. In fact, I think the term I loved recently was data exhaust.
Yes.
To actually build products that are really important for people, right?
Yes. Yeah, so I think, one is, like you said, is digital identity and one of the largest rollouts anywhere in the world. But what's interesting and the latest update is that they've actually come out with an account aggregator. So earlier, when we had to underwrite a customer, we didn't have one view of all bank accounts. Today, because of account aggregators, and there's licenses that have been given to multiple NBFCs, non-bank financial corporations, where I can access, if I've onboarded them, I can access all the banking across different banks in the country. So it gives me a single view of the debit and credit, which enables us to come with surrogates to say, hey, this is his limit that I would like to give, versus just going out and lending against an asset. And the biggest change which this has made is actually move to flow-based lending. Like I said, earlier we used to do asset-based lending. A person used to walk in to buy a two-wheeler. We used to say, okay, you want to buy a two-wheeler, your loan to value is 60%, go ahead and take it. But that was limited to two-wheeler. Today, because of this infrastructure, we use 100 data points.
Like what? Give
We
me.
use PIN code, we use India Stack, account aggregator, age, income estimators, multiple demographics, multiple 100 data points, basis our own data to say, hey, I'm not underwriting that asset. I'm underwriting the profile. So if you walk into the dealership, the customer would get a loan limit basis what he or she deserves. So it's not about a $2,000 bike. I could give a $5,000 loan limit. He or she takes $2,000 for the bike, $3,000 go into a different form factor. And the form factor could be a wallet, could be a card, a prepaid card, or could be just a loan in a bank account as and when he or she needs it. So it's actually empowering the customer to fulfill the dream of upward mobility. That not only two-wheeler, if they want to get a phone, if they want to cater to their children's education, they're being able to do so. So the world is changing. 10 years back was very different. Like you said, notes to plastic, and we are seeing asset lending to flow-based lending, which is a whole new paradigm. Obviously, it comes with some challenges, resistance, which is adoption. Sometimes when we deal with the bottom strata of the economy and with rural India, there is resistance because they are used to high touch. They're used to someone coming in and saying, hey, I'm facing you face to face and I want to come and give you a loan, pick up cash physically rather than digital.
Yeah.
So that is something that I think as an industry we have to be responsible to change the culture of the customer, to say, you're paying me digitally, you need to trust me, right? And it will take time, but I think that adoption will happen. Just through this digital transformation, we do 6 loans a minute now, right?
Incredible.
Which probably 10 years back, we were doing 52,000 loans in a year. Today, we do 1.6 million loans in a year. We acquire so many customers. So that's the power of digital.
So Ganesh, there's a number of issues that you raised there, but let's bring in Ganesh here. Tell me about how what you see in India compares with the other areas of the world that you operate in. I know you operate everywhere, right? Latin America, Africa, the Middle East, India, South Asia, but maybe draw just some comparisons about what's similar and what's quite different.
Great, thanks. No, I think what Abhimanyu spoke about is a good tee-up or setup to the whole discussion. I think India is truly unique. I think the interesting piece about financial services is we see a lot of similarities, and over a period of time, and we have done this for a decade now, you realize that there are a lot of similarities in human behavior and customer experiences and so on and so forth, and SMEs and the way they operate. But at the same time, yes, India is unique on a few different dimensions, which makes creating solutions for India that much more challenging, but that much more exciting with a great opportunity at the end of it. I think for one example is the pricing pressure. Very few markets, even in emerging countries, and we have sort of the broadest coverage within emerging markets, but very few markets have the pricing pressure that India has. And we're typically a market which rewards success at scale, and that is, in more often than not, that's the way to go, especially when you're serving sort of the lower income and underserved end of the spectrum. Necessarily not true when you go to the higher end of the spectrum, but definitely at the lower end of the spectrum, that's very true, and especially where we operate with financial inclusion. So pricing pressures are extreme, whether it's in payments, whether it's in lending, whether it's in wealth tech, so on and so forth, across the spectrum. Secondly, I think from a scale perspective, India could be sometimes misleading if we don't understand the scale and serviceable market opportunity well. Because folks can get carried away by the conceptual or potential large market opportunity, But I think the market has a much more finer segmentation than we have seen in a lot of other markets. So
Tell me a bit more about that.
So I think in some of the countries where we are, we operate in countries which have 40, 50 million population scale to India, which has 1.4 billion, and sometimes it's easier to kind of in some markets it's easier to segment just lower, middle, and upper class, and in some markets actually a middle class doesn't even exist, frankly, and the characteristics in terms of similarities across these classes can be easily classified and separated. Frankly, I don't even know how many segments or classes are there in India.
Right.
It's such a complicated, nuanced layer, and folks who try to apply the lower, middle, upper income class kind of a delineation
Doesn't work.
Yeah, could actually get completely led, could be led astray, and it might be too late till you realize that even within the lower income class, there are multiple layers on depending on the service. If it's an SME, a micro entrepreneur versus a small business versus a medium business versus a large business, and between medium and large, the number of segments that exist makes it a lot more complicated. I mean, we are investors. We were investors in a company called India Mart before they went public, and we got off the board. But they cover about 100 plus million SMEs in India. In the official database, 100 million plus SMEs don't exist today. India Mart covered more than 100 million SMEs, right? And it's super complicated. Service SMEs.
I mean, I imagine if you have 100 different data exhaust points, you're definitely able to combine those different data points in, I don't know, 100 times 99 times. You could be almost an infinite number of different kinds of customer or kinds of person, right?
Yes, so the balance is to figure out right segmentation, but which might have certain scale. Because if you start segmenting too much and you start serving too much of a niche, you might end up with mostly serving subscale segments.
Right.
And on the other end of it is what I was saying, which is it's not as simple as just 3 broad segments or 4 broad segments. So I guess we have to find a balance, which ends up being more of a struggle in India than number of other markets.
Interesting. All right. So complicated, challenging, but also incredibly exciting. Well, let's talk a little bit about how the kinds of things that are being built, for example, on the stack, and what that's changing for somebody within India. So it's now possible to buy now, pay later, right? Ownership plans are also changing. I don't necessarily need to buy my two-wheeler. I could lease it, which is such a relief to me. But I imagine for some folks that may be a real mindset change because it's not something that everybody grew up believing that was always the dream, right?
Yeah. So I think a lot of the stuff that we spoke about earlier in terms of data and infrastructure and India Stack. Just imagine, like 10 years back, about 15 to 20% of two-wheelers sold in the country were finance, and the rest were all cash buys. Today, which is as recent as last month, the number is 70%. So 70% of two-wheelers sold in the country were finance. It's not that these 50% increment were not taking finance earlier. They were actually taking finance from the informal sector. So there has been this digital revolution has given access to the underserved, and they were probably taking finance at absurd rates, right? And they were paying through their noses.
Yeah.
Now they've come to really the formal economy, which is incredible. Similarly, we are seeing a big trend in BNPL. Right, consumer durables, I think, if my memory serves me right, 90% of consumer durables which are bought on finance. And a majority of that is BNPL.
Buy now, pay later.
Yeah, you go to a store, and hey, earlier you had to buy a TV or a phone. You would save money for the next month, next 2 months, get your salary and go and get it. Now you have apps, you go to a store and say, I want to buy that, and they'll give you a payment plan. Buy now, pay later, and you just click and you get access to it.
But I imagine this also requires a certain amount of financial smarts and financial education, right? Because it can be very tempting to do buy now, pay later on a lot of things, and then to have your budget get way out of control.
Absolutely. So we see this happen in the US. We know that one of the largest buy now, pay later firm from, I think, $40 billion of value today is at $3 billion, right? So we see that. And I hope players in India also realize, because one is, of course, companies getting bust, but more important is being a socially responsible lender.
Right.
You don't
How do
want
you do
the
that?
consumer to be over leveraged.
Right.
Right. So I think as an industry, we need to be more responsible to say, hey, we need to ensure we don't over leverage the customer, because that has lots of negative impacts. Right. And we don't want, in a growing economy, we don't want Indians to be over leveraged.
Right.
And that's never been the
Not
the
good for
case.
anybody.
Yeah. In terms of ownership models, what's happening now is in the urban cities, maybe the top 15 to 30 cities, we are seeing the younger millennials coming out and saying, hey, I don't want to own assets, right? I want to just do a subscription. I'm seeing a lot of this in electric vehicles. People don't want to buy an asset. They're saying, I want to pay a monthly subscription, which would include number of kilometers, which would include my insurance, which would include my service. And after 2 years, I can change it. But when I go slightly rural, it's a mindset change, because they feel that owning an asset is a social status kind of thing. So it's very difficult to change that mindset, because it will take time. But the way which I see in the future, next 5 years, there will be no EMI. There will be no equated monthly installments. There would be subscriptions, there would be leasing, there would be different ownership models, not only for vehicles. I think it would be for most products.
Interesting.
Right? Now, if I look at consumer durable, there's no EMI. It's buy now, pay later. It's a revolving loan. So I think there is access of consumption to the Indian. But at the same time, we have to be very responsible, because this is a slippery slope.
Yeah.
Right? While data is coming in, as an industry, we should use the data to select good customers, not to just deploy all the money, right? We should use the data to select good customers and become more efficient, rather than saying, hey, I have all the data and I can just keep leveraging the customer till he can't pay. So I think that's something that we should do. And of course, Ganesh being here, he can give us all the money and we are happy to deploy it. His fund is a fintech fund, so.
Well, let's talk about that, because actually, Ganesh, your firm sees fintech actually slightly different. It sees finance as the ability to link with education, to link with innovation, to link with agriculture. So talk a little bit about how you do invest your money and how you see it as a driver of economic growth.
Sure. And I'll also answer touch upon a little bit the point that Abhimanyu made, which around responsible finance and lending, which I think is very close to what we do and work with regulators on across markets. But starting, with the point you raised, Eddie, we look at fintech and financial innovation sort of quite differently. It's not necessarily a be-all and end-all. We look at fintech as weaving into the fabric of economic growth quite broadly, and as I have often said, we look at it as the oil that greases the economic engine. And
or maybe the solar power that shines on the economic engine.
Hopefully, one day we have 2 large solar financing companies in our portfolio that are doing extremely well. So yes, one day hopefully they'll prove that point. But the fundamental point, maybe I'll take one example. We have a portfolio company which is one of the largest agri tech platforms, post-harvest agri tech platforms in India. Starts with farm gate aggregation, does collateral management and warehousing. And because they have full visibility into the produce, they're able to underwrite and finance. And because they have the understanding of data and they can finance, banks also work with them to finance even further those farmers, waiting for the right time to sell. And then this company provides market linkage as well. So are they a fintech company? Probably not. But is financial innovation so instrumental? And
so just talk about how that particular investment in that company has changed the lives of the farmers that are using it.
Absolutely, and that's one of the really hard-hitting facts we realized when we did our diligence on the ground. And in fact, part of my family clearly has a lot of farming experience as well. And you see that for different kinds of produce, how much the farmers get challenged from the time they harvest to actually they get to the mandis or the trading trading platforms. And even once you get there, you're really at the mercy of the traders more often than not. I mean, the systems are getting a lot more efficient in the country now, but I think that's a challenge most farmers face, most marginal farmers face day in and day out. What this does is really gives them the ability to access cash flow for their next cycle of crop, while waiting for the right time to be able to get the best value for their produce. Is it always perfect? Absolutely not. But is it much better than the position they were in terms of being at the mercy of selling at whatever price they're given at the point of harvest? Yes. So it makes a pretty significant difference. And on an average, I think hard to put a number, but we're certainly seeing already a 25 to 35% difference it makes in terms of economic impact for the farmers.
Phenomenal. Now, I'm seeing a blinking screen at me. I believe that we need to move on. I'm just going to look for some confirmation that we need to, or do I have another minute? One more minute? Great. Okay, so I'm going to ask you guys one more question each. I'd love to hear, Abhimanyu, your motto is finance made easy. Can finance be easy while still being safely regulated?
Yeah, the regulator in India has taken regulation very, very seriously. And, I come from a non-bank financial corporation, but our regulations are at par with banks. So I think it's a very good thing, because there is a lot of public money at stake, right? There is about 29 lakh crores, now you can just put that in dollars, or actually 50 lakh crores outstanding of NBFCs in India. So, which is important to be safe and regulated. And our tagline of finance being made easy is, when we started, we said, why can't we give white glove treatment to the common man? Why should it only happen to HNIs and the exclusive few? So why can't finance be first accessible? Second, be as it should not be transactional, it should be a relationship. I'm sure as an HNI, especially you, when you have multiple bank accounts across the globe, you have private bankers roaming around all over to open your account, to take you out for coffee, etc., etc. So that's something that we're trying to solve. Of course, our scale is, we have about 8.5 million customers. So we're trying to see how do we get that in that scale.
Yep.
At least be more transparent, be ethical, be very honest, and not really, if our interest rate is X, deliver that promise that we give to the common man. And our philosophy is that the man on the street is our customer, and we want to live through all the financial needs as he or she actually grows in terms of the financial age.
Interesting.
And that's what we are doing. And I think data and technology is really helping us, and we're utilizing that. And I'm sure you'll see that, like Ganesh said, finance is either the oil or the solar, the wind or the solar power, the rays, sun rays for any economy. And if India has to go to $5 trillion, which I'm sure we will, financing in India has to grow at double digit. So for that, there'll be different parts: digital, traditional, fintech. I think all of them need to come together and partner, and not think that we are competing.
Okay.
With a common goal of taking India to a $5 trillion economy.
Fantastic. Ganesh, biggest unrealized opportunity, and how are you going to help finance it?
Biggest unrealized opportunity, I wouldn't say it's unrealized, but it's very much under-penetrated, I would say, is financial infrastructure, because it's very, very hard to change. And financial infrastructure is quite far-reaching. It could be payments, lending, insurance, wealth tech, so on and so forth, but it also expands to a point where, with open data and the data models that we are talking about, it's becoming a lot easier relatively to build integrated solutions, more contextual solutions that make have a far-reaching impact within the society. So financial infrastructure and on top of that applications, which really make finance talk to relevant sectors a lot more seamlessly. I think it's a massive, massive opportunity. We're going to see that whole layer being rewritten and becoming more efficient over the coming decade or so.
Fantastic. Well, thank you very much to Abhimanyu, Munjal, and also to Ganesh Rengaswamy. Thank you very much for joining us here in the very first India Global Forum studio. We're sorry for any hiccups that you might have seen, but this is live television. So thank you very much. And to our live audience, we'll be back right after this.
Thank you. Thank you, Eddie.